Good morning, everybody, and happy Bear Day. We are in the midst of an economic slide, and to where it goes, nobody really knows, but that's what this thing's all about. And we've got Alan online. And how are you doing this morning, Alan?
I'm doing great. Yeah, it is unsettling, this kind of market for most people. And I have to say, I've never been so comfortable, relieved, relaxed, I guess, in a bear market as I have this one, just because we have the tools and knowledge to know, oh, well, it's going to be like that.
When you say that, what is the difference specifically between the last time or these other times you're referring to with these bear markets and this time? What is that? What's the source of that calmness?
It would be knowledge and the fact that we knew to get out of the big positions and that we can trust. That's the point, is when you don't know how things are going to go or what to look at, or it's the uncertainty that creates that unsettledness. But
Absolutely.
using the red-green tint and just saying, it's this. Do you mind turning on trend lines on this one?
Trend lines.
Yeah, where, one of the things we teach people is that when it crosses a trend line, then it's probably time to look at the other side. Doesn't mean you should get in. It's just that, that particular move is over. And, I'm not going to teach people the finer points of it, but the general points are, if you've got the tint and the trend lines saying what to do, then it's time to take action. So the tint basically on the daily was saying, it's getting pretty bad, and it broke support and resistance, if you could turn that on. So it broke below those lines, and then it's like, well, you've got everything at that point telling you, green is not the thing to be in. We don't know how deep it is, but so that's the technical side, and what we call the fundamental side is that, there's something big happening, and that people are, shutting down cities in China. Well, that's going to affect the economy. The only thing we really have to think about, as normal people, not traders, is, well, how's the economy? Can I go buy that thing, or should I hang on to my money? Well, that's where, the economy's at risk. That's not a time to be holding speculative stocks or holding investments, probably, if things are starting to run downhill, because we don't know how deep it's going to be. And that's the point of the Dow chart, is we know it does go deep. And looking at the Dow chart, we can see that in the top bar, you look at the red markers and how deep some of them are. Well, this particular year's already run, I'd say it's of the top 10 big dips since 1900, which are basically everything that counts. This one's, number 10, I think, but we haven't seen the bottom. We don't know how far it's going to go, which is the point of the tools. And if you don't have a lot of money tied up in the market and you're just waiting for the bottom, you can be relaxed. And there's people that are actually excited about this time. So happy Bear Day is because they're looking, it's a bit volatile, but they have a strategy that they've tested with the replay for day trader, or, watched the courses and then looked at things and said, I think I know what I want to do is I want to stay away from most stocks, and whatever I'm in, I'll use a shorter horizon for, like, meaning I'll just get out a little quicker because it's a volatile market. And it's not like every trade is going to be perfect. No, it never is. And so knowing that, some are going to work and some aren't, but how many work and how many don't, and just to be, okay, this one's it's time to leave. We don't know which way it's going to be. That's the point about relaxed, is not frantic about survival because my money is evaporating. And I guess, to comment on the pandemic conversation, things cannot continue as they are forever. When people are in pain, financially or physically, our body brain talks to us like, well, we don't know when it's going to end, and it again creates the emotional panic. Even if you're a smart person, it's that part of your brain is working. It's going to be screaming at you. You can quell it, but it's still going to be talking, which is a distraction. You can't be singularly focused when part of your neurology says, ouch, what are we doing here? And what do we do? And what do we do? And what do we, it's going to, like the yappy dog, it's just going to keep, even if it's quietly, it's going to keep talking. So it's a distraction.
Absolutely. And that is a really difficult thing to manage because we're getting bits and pieces of fragmented and very heavily manipulated information from the media.
Mm-hmm.
And this oftentimes is deliberately designed and planned to sway public opinion, as most people are aware of. But in these times of pandemic, that filter seems to be kind of off for a lot of people because we are in a state of emergency in some ways. And can you talk a little bit about how public opinion, let's just go back to something. I've got a couple dates written down here. 1940, early 40s. So public opinion, World War II, how that actually shaped the market.
You also had scarlet fever. That's the pandemic that people don't think about very much. But in, I think it was 1942, you had a scare on scarlet fever. And again, there was a bunch of people that had to stay home. I haven't done all the research on that to verify it, but, I got that from a friend who's in his 70s, and he remembers, some of that going on back then. So the problem is that when people are, justifiably uncertain about the future, then that changes spending, that changes the economy, which then changes how much money people make. It's a spiral. So there's spiral down and spiral up. I don't mind, spiral sideways. We have that kind of stuff. And so sometimes that's called stagflation or different words depending on the specific conditions. But the key point is, we don't know in this particular situation what's going to happen, just like people back in 1939 and the 40s didn't know what's going to happen. Yeah, the optimism felt better when it looked like World War II was going to end. And so the stock market started behaving a bit better. But, as it rolled to the depths and people knew that World War II was not going to be over in just a month or so, they knew it was going to take years. Then, when the war ended, people could actually feel like relief and they could get back to normal business. But there's also back then people that didn't have jobs. It's like, well, why? Well, the economy was geared at, building destroyers and bombers and all that sort of stuff. And people were they were hard times. So people that lived through those years, if you can find someone near you to talk to them, that was like at least a teenager or an adult that was living in the 40s. They had, shortages of rations and all that sort of stuff. They had tough times, but what was different for a lot of people was they felt they were pulling together as a nation. Here, you don't have that feeling. So there's not like a background calmness about how are we going to turn out. So there was a lot of optimism after World War II because, they won the war and that kind of thing, meaning the United States and, the European countries. And yeah, China had a relief too, because it was Japan that was oppressing China. Can you imagine that now? It's like if you said, well, China was going to be oppressed by this small country. So anyways, there's different things, and history is an interesting teacher. Yeah.
Yep, absolutely. And I love doing case studies of the past when you have similar things going on. And in this case, something similar it would have to be something that the entire world is involved with, or in some cases in history, the known world. So those drivers on the economy, things that are measured by the same standard. In this case, it's going to be economic GDP, gross domestic product. Now, here's the problem. Alan, you're an expert on this thing, as many other things you are, but this is something you're especially aware of. What's one of the problems with measuring success and prosperity with GDP?
Yeah, well, that's the when I'm looking at what's going on and when it will end. We first of all know statistically bear markets last on average 16 months. Okay, well, what does that mean? Well, it doesn't mean you're going to hit a strong bull market at the end of it. It just means that the bear is over generally. That the effect of, like, 2007 8, that the major effect is done with, and the people have settled into how it is. Doesn't mean it's good for individual peoples, like those that lost their homes in 2008. They had to recover somehow, and they did, and a lot of people went bankrupt. But if you look at the group, meaning the whole population, yeah, things just started moving along, and some people did really well in trading in the markets because they did what Warren Buffett and these kinds of people talk about, is they're just waiting for the bottom to be clear, and then they say, okay, great, now's the time to buy. And so they're making money again because they stood sideways when aside from when things were falling. They just said, okay, I'm just going to move out of the way and let things fall, and then I'll climb back on when things are getting back up. So here's the thing about the economy. We've not seen a thing like this before in history. So comparisons to other things is good, but you can't find a straight compare. And that's kind of normal because there's never, always something that repeats always some other thing. There's similarities, but it isn't exactly the same. So we know we're in new territory, and that's actually good for trying not to predict that it will do this or that by a certain date or time. It won't. What we do know is that there's going to be times when the market will continue, and this is where I use, simple logic. It is the world economy drives civilization as we know it. We're a technology-based society now, and have been for about 100 and something years. So we actually depend on, the economy depends on, you're not going to get a horse and a plow right now. I mean, these are your alternatives. You're either going to be going back to a fully agrarian society, civilization, or we have to continue as we are. And if we, so you're going to get looting and uprising and all that kind of stuff if the world doesn't sort out the economy. So, my question is, and this gets just to the answer eventually. My question is, when is it that people start dying of starvation because of the world economy being at such a problem? And when that number starts to exceed the risk of numbers of people that are dying from, the actual virus, that's when, you see, governments are not that smart. We want them to be, but they're not. Um, their mentalness is a bit corrupted by politics and all kinds of other things. So they don't have a clear head that says, this is the right thing to do and the right way to go. So telling people to stay at home to lower the effect of number of people that get infected is a great idea. But you have to presume that actually everybody on this planet will get this virus. And it's not going to happen immediately, but given how pervasive it is, and you have maybe 2 or 3% of the population die because of that. Well, people don't like these kinds of cold. I'm not being cold to be cold. I'm being cold to be pragmatic. If the number of people that die from car accidents in a year, or suicide or cancer, exceeds the number of people that die in a particular virus, it doesn't mean we don't care about that. We do. But this is where it gets to the weigh scale. As a globalizing government, are you going to have more people be upset and riot and disturb the economy rather permanently, and then bring in martial law and people starving because they don't have food? Is that better than the number of people and the overflow? See, this is where we haven't been as a society globally made a policy that says, oh, when this gets to this, we need to implement this protocol. So this is new territory, and uh, the government and the planet and the people are they can, but it's new territory. So we don't know, but these other things are going to happen because we are a technology-based society where people do not grow enough food, and we depend on all these other people. So there's this interdependence, and so when the government changes the rules and says, oh, you can go out in the streets and you can go do this and do that, and we'll just have to deal with, because they've got social pressure to deal with it. When we get back to a normal, and we have to, it's either that or the horse. There's no real difference. It's one or the other. When we get back to a normal society, and we must, then the economy will pick up again slowly, and we'll deal with, better technologies on detecting. And there's already people dealing with how to get rid of the virus. And so there's going to be earlier detection because we're a progressive technological planet. So that's where we're going to end up is, oh, well, the virus detection is, you go through an airport scanner and there's some new DNA level kind of sensor that says, hey, you've got this and that. That'll be the way this planet turns out. But in the meantime, you've got chaos where people don't know. And yeah, there's going to be people that need food. That's what's going to pressure the government to go, whoa, let's get back to normal or something halfway.
Absolutely. And governments, they're inherently bounded by their perspective. They're being paid to fulfill a function in society, governance, which means they have to look at things from a certain perspective. And as you said earlier, they're usually not they usually don't make the best decisions from time to time because of that bounded rationality. They have to make decisions in a timely manner to maintain order. Well, that's really difficult when you receive bits and pieces of information that may or may not be correct. So you oftentimes have these 50 or 60% solutions, but society is demanding action. They're demanding something. So there is a tendency to act before you have all the facts, or to overreact and then react to the effects of those decisions. And there are a host of other influencers like gaining votes. For example, right now, one thing that's going on is we're in an election year. So decisions are being made for reasons that we may or may not understand. But one thing that we can guarantee 100% is that no matter where you choose along this chart that goes back all the way to 1900, you can pick any candle you want, any point in time, and I will make you this guarantee. If you were there at this time right here, the future's uncertain. The actual way things play out is always uncertain, because in any system, if anything changes, then it has second, third, fourth, fifth order effects that are unpredictable. So to spend time trying to figure out the timing or the exact events that will occur, that's actually a waste of time. Alan, you and I spend an incredible amount of time, or let's just say a percentage of our time together, talking about why having a system, a way to perceive, and a way to manage, and a way to actually determine what to do is so important. Why is having a system, in this case, or a way to perceive what's happening, so important?
Yeah, just as a stepping back a little bit we use certain tools to do certain jobs. And so what you're talking about is having a logical process versus an emotional process. And I quite like how you said, because it's true, we do, that uncertainty is always there. And so if you're using, like on computers, if you have a emotional processor inside your computer, what is that thing processing? Is it actually processing something that makes a binary decision? It's not as reliable an outcome. It's not a good calculator. Well, if it's not good at calculating what I should do, why do I use it? Well, we're human beings. We're built with the emotional and logical processor. And the problem is that, and this is McClelland's theory of the triune brain, is that the emotional processor will take over the logical reasoning processor. And that's where people lose IQ points, literally, temporarily, while they're emoting. And that's just how the brains are, human brains are built. You can't actually get around it. The only thing you can do is learn to calm yourself. And so what you're saying, moving to what you're talking about, is what are you going to base certain things on? Are you going to make a decision based on emotions as a financial tool? Or do you use something else that is math-based probability? The odds are good over here to do this kind of action. We talk about is it a good idea to go against the red green lights in the intersection when you're driving a car? It's not a good idea to go against the light. That's all. Your odds of success are proportionate to the condition. If you go against the conditions, you're likely to have a certain outcome. And which is why we've got the red, green, and we've got those bull bear markers, those lines on there. And going back in history, you can actually, and this is why I'm calm, is because these tools are finally built, and it's easy for us. So if you wouldn't mind turning on the bull bear lines, and we'll just look at one thing. And that's that. Yeah. If you go back to, let's say, 2016, go back another year or two. It doesn't have to just, right arrow, left arrow, whatever that is. And so you've got green on the bottom, and you've got these lines, and you're above the red line. That's actually off screen at that point. It's like, well, going green is a good thing because you're above the red line, you're above that middle line, which is actually what is used for pullbacks, but you're not in a bear. So investing is a sensible, good thing to do. And nothing during that stage hit the red mark and it kept going down. So, you could be still in investing. You might want to watch it when it crosses that middle line where it's like, well, short-term things you can do. And this chart is not exactly meant for short-term actions, meaning days or weeks, but it's meant for the bigger picture. So if you go back, let's say to 2008, and so you can look at 2008 and 9 on screen, it's like, well, when was the time that it was safe to get in the market? Well, you've got green tint on the bottom, and then you start getting above that purple line, that fuchsia line, whatever that is. Yeah, that guy. That's where you're off the 52-week looking bear. You're out of the bear world, and it's green. How did it turn out? Well, if you would have bought around then, you would have held your own or made good money, right? So that heavy red line is the all-time high marker. Well, we don't actually care too much about that for this view. If you're trading, you just want to say, okay, well, conditions are generally good. We're not on the bottom anymore. We're moving up. This is a conservative trading system. So aggressive people, when they're trading, they make more money. But this is the part that people don't hear. They lose more money too. Bigger swings. And so some people's personalities drive them to choose that. But if you want like a conservative thing that says, well, when's a safe time to get in as an investor, not trading where you're making money on the ups and downs and short runs, like, there's going to be stocks that show up on the daily dozen that are good ones to get. So let's look at another big bad one. Let's look at 1934 or so. something in that kind of range. And you're off the, yeah, right there. You're looking at 19. What do you got there? You're off the bottom. You're above that fuchsia line, and you've got green tint on the bottom. Well, that was a pretty good time to get in. Did I have to do any thinking? You see, that's the part. If our emotional processor is the one that's running, which it is, and it takes over our logical brain, because it will, you're not calm and you can't make good decisions. A human being, that's just how it is. It's only psychopaths and sociopaths that are not affected that way. Well, don't want to be one of those. But the point is, you can't turn it off. But what you can be is you can be in a state of calm, because well, if you've got 120 something years of data and you can look at something with the same view and you go, this actually works. So that's where the emotional processor can shut down, because it goes, oh, you've got this logical side. You've got a system that works pretty good. It won't be perfect. We're not here for perfect. We're just here for, to enjoy life and have a reasonable, successful thing. We don't have to make the most money. You never can. It's too late for you if you want to be the richest person on the planet. It's not happening. So if you're not the richest, well, then you can have a comfortable life. Okay, good. Well, what do I do? Well, I'm looking for green above we're not on the bottom anywhere. And this just works again and again and again. So that's why I'm calm, is I don't have to think about it. I have a system. Is it perfect? No. Is it really good? Yeah. And I didn't have that when I started this mission back in 1986, is where, why don't you go look at that year and we'll just see what the charts say then. Is I was young family and all that kind of stuff, and the market, the mutual fund that I was with was really performing badly, and so I thought, well, I have to go dig into this, and so I got my securities license so I could actually sell mutual funds. I wasn't interested in selling that. I was more interested in, well, how does this work? And I'll just be an insider and learn everything, and that's the beginning. And so I started trading commodities, oil, and all that sort of thing. And I didn't know what I was doing. And that was part of the discovery. Is I didn't know what I was doing, and anybody I asked at Refco was a big company back then, and I knew people that worked there, and they didn't know the floor. The traders there didn't know what they're doing. They kind of knew, but it was like reading tea leaves. They didn't have like a system about all that. Anyways, that's it for me today. Being relaxed is actually an important thing, because you actually think clearer. That's just the way it is for being a human. And then having a set of rules and tools also made it sense. So here you can see that it was just before 1989 started that you've had the same conditions where you're above the line and you got some green tint. Okay, that was a good time to get in. Well, when was a good time to get out? Well, I'm not going to get into micro timing, but you can see how that looks a lot like where we are now. The difference is it may go lower than it did in 1988. It may, because we haven't seen the full effect of the economy yet. People are not back at work. I fully believe that by 2021, things will be more normal again, and it'll be like the forgotten virus. But that's just my guess. What do I do as a trading decision? Oh yeah, well, it's time to leave or time to get in. Well, it's not time to get in, I'll tell you that.
Absolutely. And your perspective is extremely valuable through these times, because you've seen a lot, and you know what you're talking about, and you've got all the evidence in the world to know how to manage these things more than anyone else I've ever met. So thank you very much for sharing your perspective today. And we're going to be doing these little chats on Genius Street from time to time. We'll keep them shorter for the next couple weeks, just to make sure people have some they can get through the podcast quicker, get good information, and then use that good information to help maintain their sanity through this pandemic. But the critical things today are very simple. What is your system of of noticing or listening to the media or finding out what's going on, and what's your system of action? What are you going to do with that information? Not doing anything can actually be a solution if it's well thought out and practiced. So you have this tool available on our software. It's the Dow 1900 chart. And then we have other charts available like these daily. These are the market 6,000 plus stocks available on the daily, the weekly, same thing, and the monthly goes up to 2,500. As you can see, the perspective changes. So it's very important that you understand what you're looking at when you're looking at it. Okay, thank you very much for listening. This has been Alan and Steven with Trader Genius. Happy trading out there, and we'll see you soon.